Let's analyze the stock's supermicrocomputer company and delve into what's happening. We'll examine the chain of options and touch on volatility. Some very interesting signals are being sent to us. We'll look at the trading volume in options. Let's start from the very beginning. Over the recent period, this stock has seen significant growth. Over the past 2 months, the growth has been almost 300%. There have been very strong volumes as well. Additionally, this company has been included in the SP 500 index, which is also a very important signal. Let's immediately look at the volatility. Volatility for this company is currently very high. On average, it's around 100% for a stock of this nature. With such a market capitalization, this is quite significant. Let's look at the volatility smile. We might not need to focus on the current strike, which expires today, because the volatility there is clearly skewed. Let's instead focus on the broader volatility smile. And as we can see, the volatility is on a straight line. In other words, it is elevated uniformly in both the puts and the calls. This is a very important signal. Traders are factoring in increased volatility and potential growth in the stock, both upwards and downwards. Let's look at the historical and implied volatility. The white line represents implied volatility, while the gray line represents historical volatility. I want to draw your attention to the fact that historical volatility is higher than implied volatility. However, in the future, historical volatility is expected to decrease because the current level of 135 is indicative of a somewhat unserious stock. But now that this stock is in the SP 500, its volatility will likely decrease over time. Now let's look at the open interest volume. The highest volume is concentrated around the $1,000 level for call options and $950 and $900 levels for put options. However, it's worth noting that the tallest column represents options expiring today, March 22nd. This is important to pay attention to as there's also trading in weekly options with zero expiration date. But again, someone bought these options, so someone will sell them. Next, I'll show you a strategy on how to play this stock. Now let's look at the chart. I'll remind you of my philosophy that I can't predict price movements. I have no idea where the stock will go. However, according to the options market, I can speculate that price movements are either finished or nearing their end. But even if the stock were to rise, for example, to $1,300 or $1,400, the risk-to-reward ratio wouldn't be in the investor's favor. I've mentioned this in previous videos. The most important thing is the mathematical expectation and adept position management. I always stress the importance of managing risk. If you manage your positions well, it doesn't matter where the stock goes. At the moment, the risk-to-reward ratio is not in favor of the investor. I generally don't give any investment advice because if you listen, you will definitely lose money. I don't have these stocks anywhere in their portfolios. I don't trade them again. I would stay away from this stock. Someone here draws some head and shoulders, but again, I think sooner or later we will be heavily corrected and return to our normal values index, and passive funds are required to include it in their portfolio. And it is because of this that some stabilization of the price may occur. Nobody denies this, but I assume that while passive funds were buying this stock, someone was selling them, this stock and in general. I think that there are very large sales going on. Profit taking on this stock can also occur through call. That is, someone sells call and thus minimizes the volume because... But again, I remind you that I do not advise in any case to repeat transactions after me because you do not know how I structure, what logic I use. Yes, I have developed a strategy as we see what we get profits. In any case, that is, if the stock grows to $1,200, we will get $23. Falls to $800, we will get $20. That's what position management is. But again, if the stock sharply falls or rises from the sold option, we can start losing money. That's why this position needs to be managed the right moment to buy options, sell options, hedge them. This is a whole art. If you have questions, write to me by email. I will definitely help you develop a strategy. Let's return to these stocks. Nobody argues that the stock is good. Yes, it has a very solid growth of profits and revenue. It's all very good. But here's the main concept, that the stock is very oversold. By all indicators, I'm not even talking about technical indicators. I'm talking about fundamental indicators that the stock is very, very expensive, simply unbearably expensive. It clearly needs to be corrected. So I assume that in the near future, either it has finished its upward movement because it should soon finish and start correcting seriously. But again, don't follow me blindly. It's better to use some strategies that will allow you to make money in any case, no matter which way the stock goes. That's the most important thing that I always advocate. I also advise you to watch the previous review of this company. There I made a forecast, and so far it is going according to my plan. Good luck to everyone.